Welcome to today's daily report market analysis videos on Thursday the 22nd of August with me, Richard Perry, market analyst at Hantec Markets. Plenty affecting markets over the past 12 to 24 hours. We've seen these Fed minutes last night, which really did just leave the market a little bit wanting more from the Fed, and the fact that the Fed was still emphasising this mid-cycle adjustment rather than going for all-out rate cuts, I think really did suggest that maybe the market was seeing the Fed as underwhelming. And we saw a little bit of dollar strength coming through, but nothing major. We saw more of a safe haven move back, really. I think the yen continues to be a play that I think we're looking at the moment, and also the consolidation on gold continues. But it is interesting that the Fed minutes obviously came before Donald Trump's renewed tariffs suggestion that he was going to be raising tariffs against China. He said that at the beginning of August, and subsequently the markets will be looking towards Fed Chair Powell's speech at Jackson Hole on Friday to really give more clues as to exactly what the Fed is going to be doing with rates, because dollar has basically consolidated in the past week, I think, ahead of these ahead of the Fed, but the minutes, but also Jackson Hole on Friday. What we did see was a yield curve flattening. We saw the little bit of a jump up on the 2s10 spread the earlier part of this week, but that's back down sharply lower yesterday as the 2s jumped on the disappointment, really, that the Fed is not really pushing ahead with this rate cycle in an aggressive fashion. The 10s didn't really move, subsequently dragged that 2s10 spread back towards zero again. And again, that sort of close to inversion at that spread, and also questions the Fed whether it's doing enough to prevent the slowdown accelerating into possible recession. Basically, is the assessment there. Today, we've seen the flash PMIs. Interestingly enough, flash PMIs for Eurozone came out pretty positively. Actually, markets flash PMIs for France and Germany both improved across the board, and subsequently that helped to pull the composite PMI up to 51.8 from 51.5 last month. We were expecting a deterioration to 51.2, but that 51.8 only really equates to around about 0.1 to 0.2% run rate of GDP, so still pretty tepid there, nothing really decisively positive. Little bit of an uptick on the euro on the back of those numbers. The euro was trading below 111 big figure, and actually down on the day before those numbers, so euro actually coming back higher on those flash PMIs. But we've also got the US numbers later on this afternoon, so you could see, say for example, if the US numbers come in relatively positively, then that could unwind that move. But certainly the Jackson Hole speech, I think, is a key focus for markets today. A little bit of a mixed outlook on equities. Nothing really doing in terms of direction there. We saw S&P 500 higher yesterday, but off the highs of the day. Futures for S&P 500 a little bit mixed. They were lower, but ticked a little bit higher into the European session, but basically not really doing a great deal. So let's have a look at those US flash PMIs, because they comprise the main data point today. Expected to tick slightly higher on the manufacturing and slightly lower on the services. We've also got Eurozone consumer confidence expected to slip slightly back to minus 7.0 from 6.6 last month, and that is the data today. Now, my chart of the day is the DAX. Now, interestingly, we have seen equity markets which have ticked higher yesterday, and the DAX performing pretty well today. Even though we've seen futures relatively flat, we've seen the DAX sort of holding up well, and I've been saying that these equity markets, just in the last week or so, I've been saying that the resistance band between 11,620 and 11,845, basically, these old key levels of that June low, and also the long-term pivot around 11,845, has been a key factor for the DAX, and how the market resolves this pivot line, these pivot areas. Basically, we're trading inside it at the moment. How the market resolves that, I think, could be key for direction, because a breakout above 11,865, which was that intraday reaction high on the 9th, but generally 845, would be a breakout, a near-term breakout, because it would change the trend. We've also already seen the downtrend channel broken. And we're looking at now improvements on the momentum indicators, that MACD bull cross, the stochastics crossing higher and accelerating, the RSI in the 40s still, but at 3-week highs. Now, I've said on the morning report, I think a move above 50 on the RSI, coupled with a breakout above 11,865, would really be a positive signal, I think, on the DAX. It would also take you above, back above some of these moving averages as well. So I think it would be a really interesting positive signal. You could argue on the hourly chart it would also complete a little base pattern as well. You've got this sort of edge towards a more positive sentiment here through the RSI on the hourly, but holding above 50 now. MACD lines above neutral. So that's 11,620, which was that old low, interestingly enough, has been the basis of support this week. And holding up above that, you can see the market continuing to improve. So that is a key level of support. The resistance obviously key at 11,865. So lots to think about on that DAX chart, but has had an initial look at 845 today and just backed off a slight amount. So again, it'll be very interesting to see how the market responds to probably that Jackson Hole speech now from the Fed Chair Powell. So with that in mind, I wish you good luck in the trading. Click here to subscribe to our videos on YouTube, but also go to our website where you can sign up to our webinars. Thank you.